Welcome to Accountants Law Pod, where accounting professionals and law firms converge. Hosted by Linda Artisani, Sarah Prevost, and Stephen Libhart.
Hi, everyone. Well, we just came back from a week of speaking, participating with our accounting professionals at Intuit Connect. What do you think, Linda? It was you and I. Steve had to lay low this year and take care of a lot of client work. So,
Yeah, it was me, you, and Tiara. Don't forget T. She was with us, thank God.
Oh, yeah, Tiara
Um,
was with us. Yeah.
Yeah, it was different. It was different than last year, which last year was not that great. It was kind of messy. The food wasn't good. It just didn't seem like it didn't seem like it had a direction to it. This year definitely felt like it had a direction, but it felt more executive. The people that were there were from larger firms. It seemed like they had more clarity on what their driven purposes, which if you looked at their only announcement, really, I mean, they had really wasn't full of, here's a new tech this year. It was more, we have a new suite, which is actually a bunch of other products that they purchased, added on to a product that they already had that they're going to improve on, which is QuickBooks Online Advanced. And they're calling it Enterprise Suite. So that was kind of their big, I'd say, announcement at first for changes for next year.
For software change, the elephant in the room was this is on Gazarzi
Oh, that was something.
which has been written about. Oh,
yeah. So just so in case you don't know about it, because you've been living under a rock somewhere, there was an ad that came out with Intuit that said, fire your tax professional and they're going to beat the price. So they sell a service of doing your taxes through TurboTax for businesses now. And it was fire your tax professional. And that didn't land well with all.
Very blatant.
It was black and white. Yeah. And it didn't land well with tax people, kind of like how we felt when QuickBooks Live came out. You know, it was kind of insulting that now you're a software company and you're going to sell accounting services and compete with us. The same thing, only they're actually to a worse extent, because now you're telling them flat out, fire this person and hire us, which I thought was really bad messaging on their part. And Sasan came out and said he apologized for it because it starts at the top, which his words were, I would love to hear it like on a recording to know exactly like what he said and to understand where he was. I think you'd really need to hear the words again to really kind of dissect what it was.
Yeah, agreed. So in that moment, there was a lot of emotions for some, others were fine with it. And a lot of articles now have been written about it. But overall, I will say the community, the accounting community, we appreciate the time together. I went to several sessions where I did really enjoy. I wish I could have stayed longer in a few of them, but got pulled away for other things. And then our session was, for us, enjoyable. We always, as you know, Steve, we did it with you the prior year. We always enjoy that kind of stuff. And we had the opportunity with our colleague Terrell. So yeah, but now, you know, this is all like new stuff, right? New software coming out here at year end. And part of what we're going to probably talk about today is going to go into year end cleanup of client ledgers. And that's what we had on the docket to talk about. So it's interesting because we're learning software during this period of time, but it's also a heavy lift for us. People think it's our quiet time. It's our lift to get things buttoned up, tightened up. So what do you got, Steve? What are you doing?
Well, I think if you're listening to this podcast today or watching, get your notebook out and take some notes, because you're going to get a lot of checklist items that you can use to really make your year end much easier in-house, so that your accounting side can help you out even much more. Looking at, especially in the legal industry, checks that haven't been cashed are posted on the books. And so going in and looking at the reconciliation reports and verifying which checks are still not cleared out there, double checking simply as going into your chart of accounts and looking at the ledgers in there. And
so making sure that you didn't add, like Linda and I see sometimes a whole bunch of new things that we're like, wait, why?
Yeah. It's, just really taking a look, or having your accounting support have a checklist of things that you both agree on to go through, looking at your client lists, looking at payables, are the payables ledgers correct? Do they have minuses in them, and, different things like that. So it's a good time of year to clean everything up, so you're not scrambling at the first of the year when you're wanting to get your file over to your tax preparer. I mean, those are
And
some,
also, when you're looking at the reconciliations and looking at what's uncleared, any checks that are outstanding that have been like that are old, that are 2022, 2021, 2019, that have just been sitting uncleared, they have a responsibility to try to reach these people. And
correct.
if they don't, they have more responsibility to send that money to the state. And there's a lot of steps involved with that. So that's part of compliance. And I think that how many times you get a new client and you look and you're like, wow, look at all this stuff that's here. Also I think going through the client liabilities is important, because a lot of times you'll see 5 cents, 2 cents, 39 cents, $5. And that's just a matter that's been closed for several years. And there's money sitting there that belongs to the client. There should be an effort to made to get that off the books, to get that to zero, get that money to the client. Are they going to cash a check for a penny? Maybe not. And then what do you do?
I also think of other things. So client ledger, obviously the books, but we want to look at like, all right, you're probably goal planning potentially or thinking about what the new year will bring.
This is
The
a
new
great time to budget.
It
Yeah.
is, and the new compliance requirements. So you have employees. We have to look at what if you're offering health benefits, 401k, what is your state saying, and what is it that we have to meet, depending on what tier, what level you're at for federal and state level requirements, multi-state requirements. Another thing, in conversation with a lot of our clients outside of this is what we look at it, does the employee handbook need to be updated in some format? Not saying that it all has to happen at this year end, but I think having it on this planning chart of some sort or some sort of list that you keep for yourself to ensure that what can we do to help you out? What metrics do you need to support that conversation as your accounting folks? And then the other piece too is there additional training that needs to happen because software changes so much. We just saw a whole bunch of new changes, a whole bunch of new screens that are going to be popping up in just QuickBooks ledgers alone, a whole suite of reporting. Now we know from our own experience that that stuff gets rolled out and it gets buggy. So it bogs down the systems in other ways. It's just part of software development.
One of the cool things we saw, Sarah, was how you could have with Enterprise Suite, you could have multiple accounts on that are linked. So if you're doing a transaction that affects a different company file that somebody owns multiple files.
Oh, your multi-entity is what you're referring to. Got it.
They can make a journal entry in one and it actually affects the other one. It does the reverse journal entry in the other, which is really
nice.
cool. Yeah.
Yeah.
Nice.
So if some of those attorney firms that own multiple properties, you've got your law practice, but then your side hustle is you own a bunch of business buildings, which we all know that that's kind of what some people do. That could be of benefit to you in managing those properties.
If we could back up to Linda's point on the checks that aren't cashed, a lot of the regulatory agencies require that you show a reasonable effort and prove that you did that to get the money back to the recipient. So in other words, they'll need copies of letters you've sent to them, notes saying that you've tried to call them, whatever efforts that you made to get them to cash the check. And then if you can't, you turn it over to the state. And then they've got those notes and they decide what to do at that point in time. But you get it off your books at your end.
Unclaimed property.
Unclaimed property.
I think it's not just a year-end thing. I think there might be a way to balance it through your due diligence of other ways, but it's just I think it's like another effort attempt. Some of these, what we call year-end checklists, are truly us taking yet another effort attempt at these that we've tried throughout the year, because nothing's worse than not getting responses, then trying to be able to support you during a critical time that, as you know, the mass volume of other people are trying to get to, right? Like everybody wants their books ready, whether they file or not, by a certain deadline day.
Mm-hmm.
So honoring the respect of the relationship, I think, is also a big thing too, right? We've been through that before a few times, Linda and I have.
And another thing too, though, we've been part of the process of going to a client, and this is the list, and then having to aggregate the list together, and the checks are out there, and now you're going to void them all because now you're giving the money to the state to divvy it back out to the client. If they still hold the check and they decide to cash it, and it's 2, 3, 4 years old, and they bring it to the bank, sometimes the banks cash it. You can put a stop payment on it, but the stop payment is only good for a certain period of time. So know that those are some of the things you're going to be faced with. Especially if it's trust checks, right? You're going to be really careful about that.
That is so true. Okay, so I have a question for you all, just on the unclaimed part. I did this After we had a time that the three of us talked about it once, I don't know when it was. It was episodes back. And so I went in, and sure as heck, I used to live in Washington State, and there was an escrow check for me that I never received. I must have moved away, no
Oh, and you
401.
found it in unclaimed
I
money?
found it in unclaimed property and
Wow, good
received.
for you.
It was a nice little chunk, a nice, 2000 and change chunk that was my money. And, that was a long, long time ago.
Oh, we have like 30 grand sitting in the state of Rhode Island that has been trying
Oh,
to get it
yes.
back.
Yeah.
And it's been a nightmare hiring an attorney. The challenges, they don't want to give the money back, even though it belongs to Mike's dad, my husband's dad, and he's now deceased. It's a big to do. And I'm like, I think they've kind of finally just given up on it because it's not coming to fruition for anybody. And the lawyer wasn't doing his job. And it's just been kind of a nightmare there. So yeah, sometimes it's easy to get. I mean, I got money out of Florida. I had $25 somewhere for some kind of a class action suit, and I got that in 2 seconds filling out a form online. But Rhode Island's a little bit different story dealing with state.
Yeah. It's interesting though. So kind of to that light, Steve, as you brought it up before. But there are multiple things that you do in a year end. I'm sure that, you're in preparation for your 1099 season coming up.
I was just going to bring that up.
Yeah, you're making sure all of your payroll
Oh,
tax,
did you have to
sales
bring that up?
tax. I did. I know.
It's time.
I know. What do we got? Sales tax stuff, payroll tax stuff, ensuring that all of these things are met.
And your payroll stuff.
Year-end payroll stuff, which, with a holiday, I would need to plan ahead. So to all of us out there that are in the accounting world is making sure where those pay dates are for those dates. Some people have calendar year switches on health insurance. They literally, it flips like that moment. So that's also a big thing because you want to make sure you've got premium deductions correct for employees if these are non-integrated spaces. There's a whole slew of things that you could go through, but I think the approach too is part of your year end is a way to look. Yes, you're looking at the historical validate, but you're looking ahead. And how do we help you with these figures and numbers to help you plan ahead? If you have growth, if you want to sustain, those are key integral pieces of looking at, a 12-month trailing of a profit and loss, let's say, of the
It's
life.
messy leaving those lists open, and it's messy you want to have clean books.
Yeah.
You want to keep records clean for your client. I mean, it's important things. So not forgetting that. I mean, when we get clients at the beginning of the year, I'm always amazed at what we see that are left behind on the books that are not cleared off.
From a prior year close that never happened to the tax return, or like we use this time. That's a good point. I don't know if you do this, Steve, but we use this time sometimes to reconnect with the tax person to make sure.
Yep.
Do we truly have everything booked right before we close the books for 20?
Invite them to take a look at the books right now because this is their slow time.
Well, we might
And-
have had errors in their entries from previous year. We need
Right.
explanation. Yeah.
It's a good time for them to look at it too, because there's still time to maybe spend some of that money pre-end of the year so they can get the expense in. So it's a good time for the tax person to look at it, as well as us to have the eyes on it, to talk to the client, say, this is where you're sitting right now. As we finalize the year, do you want to do this, or that? That might be something you might be thinking about.
There might be planning on, okay, what is the money that I'm going to, like, if I were to close it today, let's say, not the business, but close the books today, what is my tax obligation to that personally, if they're doing your personal and business together? That's because some people, as our mentor has always said, equity is king.
Take a look at your cost receivable ledgers. Take a look at your accounts receivable. Attorneys out there, you're using a lot of different billing platforms. It's a good time to tie those two together, meaning QuickBooks and your billing software, again, using cost receivable as an example. Or if a client's paid you and there's $13 left on their ledger and receivables, are you going to bill them for it or write it off? Get those things cleaned up before year end.
That's a great list to clean up, because we see that all the time where there's just this little bits of money left over. Maybe somebody paid the bill without paying the change or something like that.
Right.
Get it cleaned up so it's nice and pretty.
We see that a lot too. You brought something up to mind, Linda, which I love that Steve is bringing this up, but sometimes you have a bill sitting there, but you recorded the payment as a different format. I got paid on a credit card versus paid out of the checking, or now you got double counted expenses because you've like recorded these waiting for them to clear. They've never cleared. There's other ways to look at uncleared. So there's just like a plethora of ways to basically
Or
audit your work.
another fun one at year end, looking at the unapplied cash payment income account. That's always fun. If they dated the payments before the actual invoice date, you might want to do a little bit of cleanup there. It's kind of time to do that if you have to do that. So yeah, that's another good list to clean up. Don't be surprised by it. Actually go in and, you should be looking at your financials at least monthly anyway, but if you're not, it's a good time to start to look at your records to make sure that things are in alignment and look good. Like Steve mentioned really at the top, is there any negative payroll liabilities? Those are lists that you'll see on the balance
Oh, that
sheet
is such a simple, an easy way to make mistakes is on the payroll liabilities. Go back and tie that back again.
Yeah,
before year end.
The other thing too is asset purchases that are made throughout the year that they're properly recorded. You have all the documentation. Because sometimes that happens. What's been sold? It's hard to know. Like I was doing a property tax thing and I'd seen stuff come through, but I was like, I didn't know what you got rid of in your assets. Like old historical.
Right.
You're in a legacy firm too. I think of your cubicle thing, Steve, that you're talking about. We measured the cubicle for cost. Okay, what happens when you purchase new things for the little cubicle, new walls? Any improvement, tenant improvement stuff that has occurred.
Well, where I see a lot of things mixed up there is on IT invoices from their IT support. They'll bill the attorney for a computer, which on that invoice then should be parsed out and put as a fixed asset so it can be depreciated. But then they also have labor costs in there. So that's contract labor. And then they have sales tax and they have all these things. And so many times I've seen law firms just book that invoice as contract labor and they lose the benefit of depreciating that, furniture, fixture, and equipment item off of that invoice. So really taking a look at all those invoices. Hopefully you've got them attached to the documents in QuickBooks,
Or
and
some
again,
place for you to see it, right? Some place
Right.
where you have your eyes on it. Yeah. Yeah. But gosh, you made me think of something else too, and it just slipped past me. But I do think it's like a little micro review. I don't want to say audit because that's not our area of expertise is audits, but it's like a little micro review of every little section as best as possible. And I know what it was. It was also owners. Sometimes this happens to us. We use the wrong card inadvertently. So we end up using our personal card for a business expense. No rhyme or reason to it. It's just the accidental moment that's happened. It's happened to me. I'm on a shopping site and I'm like, oh no, Amazon, I've used the wrong card. I can't go back. But it's figuring that out to help make sure that gets captured appropriately.
Mileage.
Going through the list of distributions to a client as well, because a lot of times you want to bring that up to their attention. That way they're not shocked at the end of the year and they're like, what is this? Especially if the year's closing, you're bringing that to their attention. Like, I want to go through it now and make sure that it's accurate, but also because that's taxable to them. So they need to know how much they've been drawing out of the business or spending on themselves personally to have an idea of where that's going to land them when they make that final payment and estimated taxes. So I think it's important to have them look at and review. There's just a lot to do at year end. I don't know. Every year I think I'm trying to get on all these things and be so prepared. And every year I still feel overwhelmed in January. I've not ever had in 26 years of doing this on my own as a business owner. I always still feel that big fat overwhelm and I really want to be on top of it. You hear about people who sit back and put their feet up and they're happy. I don't know. Because, we get a lot of new clients too. And I think that adds to the drama of it.
It does. Well, and what else too is to warn clients that are asking you to do some last minute scope creep or additional projects or whatever. And you have to warn them, if you don't get me all this data, please don't bring it to me in January because that's my busiest month of the year. And so I may not be able to circle back around on this project till February or March, and you have to be honest with them so that they're included in that process and they respect what you're trying to do for them.
We need to be proactive though, because if we're not proactive, nobody's going to be. And I think like Sarah's saying about even with the assets, you want to get the details on the asset, upload it as an attachment so that the tax person has hands and eyes on it, because they're going to ask a bunch of questions. Why not eliminate the questions coming?
Exactly.
Need the details, put just the receipt, and if they bought a car or whatever, put that in there so they have that at their fingertips. It's not a bad time of the year because, especially if you use Intuit Payroll, downloading the tax returns and putting them in another place is always a good practice. Get them out of QuickBooks, even though they're in there and it's very convenient to have all the tax returns there. It's still a good practice to take them out and put them someplace else so that you have them handy. And doing
That's like
that
with
job is pain.
yeah, and within QuickBooks, it's not like with Augusto or a different platform, but I think it's true though, Linda. It's like having the backup to the backup. Make sure you have a copy of the bank statements. I mean, how many times have we gotten into a cleanup for someone, and then
Yeah.
that firm owner is like, I don't have access to these statements any longer.
Yeah.
So we've
they close the
learned.
bank.
Yeah, we've learned a lot in these last, I'd say 2 years of just a lot of, data security. Honestly, the last session I attended at Connect, or the last two at Intuit Connect, I learned a lot about how compensation modeling needs to be. Now, you need to make sure you're compliant, but not everything has to be maybe equal because every employee's got different needs. So it could be equal in the sense of offering it to the same salary buckets or the exemption buckets, but different in the sense of what are the things that mean something more important to other people. And there's just like a whole slew of ways of dicing this up and looking at this. But when we talk about year end for us as accounting professionals to an owner, it's a big, huge bucket. It is not one thing. It is not putting a bow tie on it. You're living and breathing entities for us. We're doing everything we can to stay in lockstep with you. So,
Well, and if you have that client that you've asked every month throughout the year to have a financial meeting with you and they kind of ghost you on that, it's a good time to pick up the phone and call them and say, this is your last chance
yeah,
This is the last
to do
hurrah.
this before year end to get this done.
yeah,
Mhm.
yeah,
And it's going to benefit you. It's not because we just want to pick at you.
absolutely. Yeah. I mean, I'm getting like right now, just as a tip, I'm making plans with certain tax offices that we work with for buckets of clients. They're not with the client meeting. It's me talking about all the ones that we hold with you. I just want to make sure the mutual clients we work on together, it might be 10, 20, I don't know. I want to be able to look at all of those with you and go through my questions first. Because maybe
Yeah.
there's something I'm telling you as a tax individual that is better suited for you to talk with the client about, not including me in it. That's fine. Just you have a different perspective, and I value that relationship. So,
A lot of the different tax people ask for different documents too. It's
Correct.
always interesting to me. So if
Yeah.
you have somewhere, we tell the staff, when you're working with a new tax person or the existing one,
Yeah.
keep special, give them what they need before they ask. So when the year rolls over and you've got everything reconciled, just give them the little packet. We already know they've asked 3 years in a row for the same things. Have it ready so they don't have to ask. Get it to them before they ask for it.
mhm.
And that way, we can get everything to be tied up and closed and locked down. Use the password protect, get all that in place so that nothing can be changed once it's been given to the tax person. But yeah, I mean, everybody starts out the year, usually January 2nd or so, they start calling, I'm going to have my records on time. And then we
Well,
get
yeah.
the fire hose blown at us. And then we find out in August that they never did it. And the tax person never did the work. It's like, oh, you made my life a living. You know what?
We might be lucky this year. Looking at the calendar, January 1st is a Wednesday. So I'll
Oh.
bet you lots of attorneys will take Thursday and Friday off this year.
You
Oh,
think
you're
so?
thinking of calendar days. I'm thinking of things like, also my brain is like going like a rocket ship right now of, you got your profit share stuff that you want to accrue, but you're paying out in the new year. That impacts how we're going to do this.
And we also have to look out for the people who drain their bank account at the end of the year, and what's happening cash flow wise.
Good
in
point.
January.
Yeah.
We all had that
So
happen.
much. There's so much.
As a legal bookkeeper out there, don't be surprised if they give themselves compensation and divvy it out 3 ways and leave nothing in the bank account. And then the insurance bill comes out January 4th or 3rd. And then what are we going to do? There's not enough money in there. So
I've
we
seen
know
that
that.
happen.
True. So true,
Been there
Linda.
and seen that, right?
We always have to plan. We plan for year end, but we plan for the extra couple months too.
Yeah.
Because
you
if
wanna leave
that's
some-
if that's your thought process, it is unfair to people like us who are helping you pay the bills, do the billing, and all of that stuff. That is an unfair position, and you need to leave stuff in the kitty for at least overhead expenditures, so the stress isn't on everybody. I think people need to get used to that kind of model, and it's sad when I see it fully down to a
nothing
moment.
for
Yeah,
a good
that's
size
not a
firm.
great. It's not a great way to start the year. It's one that I detest, and actually I'll say the words, I hate it.
Yeah, yeah.
Yeah. So, anyways, well, wow, we had a lot to talk about on this topic.
I
We
hope
did.
everybody got that written down because that's a lot of stuff.
A lot of notes there. A lot of notes.
Yeah. But thank you for the lively discussion. That was great.
Absolutely. Thank you so much.
Mhm.
If you enjoyed this episode, don't forget to like, share, and leave a review. And make sure to subscribe on YouTube or wherever you listen to your favorite podcasts. Email us at info@accountantslawpod.com or drop us a message through our website at accountantslawpod.com if you have any questions or topic requests. Are you interested in joining our weekly Accountants Law Lab mastermind sessions every Friday? Visit accountantslawlab.com to sign up and hang out with the best minds in the legal accounting industry.
Cool.
Woohoo! I'm tired now after that. All the work we have.
I know all of a sudden I'm like, oh gosh,
Did you
I better
enjoy
start
the
looking at
topic?
everybody's books.
Yeah.
Oh, he did. He just meowed. You enjoyed the topic. Okay, one hand out for yes. Okay.
Walter.
Thanks, Walter. All right. Bye-bye, everyone.
Bye, everybody.
Bye.